Thank you so much for joining us today for our next installment of WAM Vault. I'm joined today by the WAM Alternative Assets Portfolio Manager, Dania Zinurova. Dania, it's great to speak with you today.
Thank you, Olivia.
And we recently marked one entire year of WAM Alternative Assets. So what have been some of your biggest achievements as the portfolio manager since your appointment in October?
Big year. Well, I was really pleased to see strong financial results for the FY21. The board also made an important decision on the dividends policy, so they decided to equalize the dividends, and we paid 2 cents at the end of the financial year 21. The board also provided some guidance to shareholders for the interim dividend, with the plan to pay 2 cents next year as well. And the engagement with the market and strengthening our WMA brand, that was important part of our work this year. This really enables us to attract and source new investment opportunities. The feedback from the broader Wilson Asset Management shareholder base, which now exceeds, I believe, 120,000 shareholders.
Yes,
the feedback was that the shareholders want to learn more about alternative assets, how to invest in those asset classes. So we launched educational series. This was well received, and we plan to continue with the educational series next year. And at the end of the day, we just want to make sure our shareholders are confident and comfortable with investing in alternative asset classes. So we want to take everyone on the journey with us as WMA portfolio grows and evolves.
And can you talk us through a little bit about what's happened within the portfolio during the year? Maybe you can discuss some of the exits and also new investments that you've made.
Yes, of course. If I think about overall portfolio, the underlying investments proved to be quite resilient, and some of them, in particular, those who had exposure to digitalization theme, they performed really well. In terms of the exits, I'd probably first take a step back and explain the concept of an exit. So in alternative asset classes, when we talk about illiquid investments, we usually think about a time frame. And then depending on the asset class, private equity, venture, infrastructure, real estate, etc., the length or duration of the investment holding period can range from somewhere 3 years to 7-8 years. So the idea is an investor buys an asset, then implements their strategy to add value to an asset, and then when the time comes, they sell the asset and realize capital gain. And this period we call exit. So we had few exits this year. One was earlier this calendar year in our private equity part of the portfolio. One of our investment partners, Fortitude Investment Partners, they invested back in 2017 in a portfolio of 6 medical clinics in South Australia. Now, Fortitude is a private equity growth fund manager. So they implemented their growth strategy in this portfolio and expanded it to 36 clinics across Queensland, Tasmania, Victoria. And they opened up to bidding and started receiving some attractive offers, so decided to exit the asset. They achieved quite a solid return, about 17% to investors on this exit. Another one was in our real assets portfolio, and that was with our investment partner, Argyle Capital. Back in 2015, they invested in irrigated citrus orchard in Hillston area, New South Wales. And again, similar story, they implemented their strategy to redevelop the asset, to improve the quality of the orchards. And this year has been a really strong year for citrus orchards, so we saw some very strong bids in the market. So Argyle Capital assessed the market, ran competitive bidding process, and decided to exit the asset. We received proceeds in August this year, and this capital will be reinvested in new investment opportunities. And the portfolio had very good level of cash at the beginning of the year. So we committed about 2/3 of this cash into new investment opportunities, Palisade Diversified Infrastructure Fund, Barwon Institutional Healthcare Fund, and Adamantum Private Equity Fund 2.
And what does the current opportunity set look like today within the WAM Alternative Assets investment portfolio?
Within our portfolio, I'm sure our shareholders are already familiar with the megatrends we are following, and they really shape the opportunity set for us at the moment. So it's growing aging population, digitalization theme or technological evolution, it's climate change and growing demand, increasing demand for food. And I really like digitalization theme. I think it translates well, seeing this theme playing out really well in asset classes like venture capital proves that it's a very attractive story for investors. This year, we saw about 1 billion of capital inflows in Australian venture capital, which exceeds the previous years. So definitely quite a few new names coming to the market. And within WMA portfolio, venture capital was one of the top performers for our portfolio. Then thinking about private equity growth, I do believe the underlying businesses that we have within portfolio, they prove to be very resilient despite challenging environment on the back of COVID-19. And this is due to the fact that most of them had very healthy balance sheet and were very conservative with the use of debt. Asset classes like infrastructure, they continued attracting a lot of capital. So the first half of this financial year, we saw just over $1 billion of $1 billion capital raised for Australian focused strategies in infrastructure. And already this calendar year, I started seeing more capital inflows into Australian-based infrastructure fund managers who invest globally in infrastructure. The area where I probably saw more capital inflows was around renewable energy. This is on the back of both Australian investors and offshore investors willing to invest in well-regulated and transparent sector, but also increase their exposure to ESG-related strategies. So very interesting dynamic in this sector. The fact that Australian government is very committed to further development of infrastructure as a sector gives investors more confidence, and we obviously start seeing more capital inflow. Real estate really remains one of the major asset classes for investors, and I think if we talk numbers, it's about 29 billion of assets under management that just in real estate. What was interesting this year, the fact that real estate equity strategies saw less demand, less interest from investors because everyone was waiting how the valuations in the market will correct post-COVID-19. So there was a bit of a pause on that front. On the other hand, what we saw with real estate debt, we saw capital increasingly flowing into real estate debt strategies. So that obviously puts more pressure on investment returns. And if I look on yields from real estate debt strategies now versus 2 years ago, of course, the returns compressed quite significantly. What I think will be interesting to observe later this year, next year, is how those new real estate equity strategies will come to the market and target more opportunistic strategies. But this will really only happen when we see correction in prices or correction in valuations. We do hold some real estate in WMA portfolio, so we have 2 assets, industrial assets in Australia, and industrial sector continues performing really, really well. Finally, real assets. I love that asset class because it's so diverse, but it's also seen as a very strong diversifier in any investment portfolio. It has low to negative correlation to other asset classes. It has the capacity to provide more yield to investors, at the same time capital appreciation. It is often seen as natural inflation hedge as well. We have quite a material exposure to real assets within our portfolio, and real assets again was one of the top performers within WMA for the financial year. So, very interesting dynamic within the portfolio, and I'm very excited to see exits next year. I expect to see some really strong exits across the portfolio.
That's fascinating. And you did mention briefly that WAM Alternative Assets is focused on these longer-term megatrends. Can you maybe talk about one that you find particularly compelling, and maybe how you're incorporating that into the investment portfolio?
Yes. So, the four megatrends we follow, I always say they are very long-term trends with strong tailwinds. At the moment, I'm really focused on digitalization, because I really see this trend is accelerating investment opportunities. It's accelerating the growth overall of the tech-based businesses. And, in some recent report published by the Department of Industry, Services, Energy and Resources, they quoted that the improvements to all sectors and new opportunities that would be driven by technological innovation, they would bring around 350 billion to Australian economy over the next decade. So to me, looking at these numbers and thinking about the macro fundamentals, it's a big indication that the opportunity set will continue expanding and will bring more opportunities for us. So we all probably know and familiar, I'm sure, with Australian success stories of some startups, and I love that story about Canva. It's a graphic design platform that was founded in 2013 as a startup. Now, looking at the company now, it is valued $55 billion after a very successful financing round of over 270 million. Thinking about our portfolio, we invested in a company through our investment partner, January Capital. We invested in a Brisbane-based company that provides online education, Go1. Again, founded as a startup in 2015, now valued over $1 billion after the last successful financing round of 200 million. So, and those stories, they are not constrained to tech-based industries only, really. It translates into all sectors, into health, retail, wherever we look, we see this technological advances. So that definitely opens up lots of doors for us, and I've been discussing new potential investments for WMA with a number of players in the market.
That's great, Dania. And it has been a really long time since we've gotten to see our shareholders. Is there a message that you'd like to leave with everybody?
Thank you, Olivia. Yes, I would like to thank our shareholders for their support, for their feedback, their engagement. And I know the last year, even more than a year, it's been a very challenging and volatile environment for everyone. And I would say for the shareholders who look for less volatility, at least in their investment portfolios, WMA will definitely serve the purpose.
Thanks, Dania.